Okay, quick Wednesday morning radar update. A little bit of news hit the tape this morning. A little bit of Fed news just knocked a bit of sickness into the market. News trumps technicals, especially on a 5-minute chart. Moving on, let's jump straight into the volume leaders this morning. A bit later than usual, been on to ShareScope for some time. Not ShareScope at all. Onto my account broker this morning, just trying to get some info on something. It is 11:16. We should have traded 38% to be an average volume. 38%. Let's have a look. What's in there today? We've got an okay day in the large caps. Let's just see. Pharmaceuticals and REITs standing out. Let's just buzz through these and get into the small caps and have a quick look. SQZ. Group sort of basing out there. This one's a lose less scenario. It's dropping off a cliff with its forward numbers, absolutely getting axed on its forward numbers by the looks of it. So yes, what is going on there? Oh crikey, wrong one. Went to the intraday chart, that one did. Yeah, turnover 70 down to 45.8 on the last full year. Trading towards 10.8. I mean, what's going on there? Who knows? Lose less, it says as well. So, yeah, you know, it is basically trying to sort of recover, but it's not going to be something I'm interested in. DC, obviously we saw this one on the outside update here. Into results, it's a little bit risky just stepping in front of those, I think, when they're so close, but depending what your risk tolerance is. Boku, active low, higher high on the daily chart there. So return to pre-tax profit, return to growth, 50 to 56, accelerating turnover on that one as well. Obviously, I know, you know, those at my chat group got in this from an extremely low risk area. It's actually up 80% at the base. Moving on, let's just jump straight into the small caps. And let me just mute the volume on that. The sun is shining outside. It's a little bit choppy out there, isn't it? Portfolios about 2 are off all-time highs in the history of the world and just chopping around a bit. So nothing wrong with that. I think we've got a little bit of summertime blues in with a bit of sport and that in the UK. Start again. Let's just quickly, oil and gas in the small caps. Software second in command today on the volume leaders. Well, let's have a quick buzz through these. Lose less on that one. Tick up in the forward numbers on win. Rear view. No forward. No forward. Solid state. Yeah, it's rear view for us now. So, you know, wherever it goes, nobody knows. It's trading towards these results as well. Hopefully it can just do a little bit of a melt, and those who took that one can trail a bit of heat out. Lit continues. If you want to know why we focus on this little area here, go to ShareScope, and I did a tutorial on reversals, big picture reversals, active low, higher lows, higher high, the zone of interest. and that really highlights it really well. So go and have a look on ShareScope if you're interested in that. Amiad, Israeli water company, ticking up. Deceleration in the pre-tax, but still ticking up. Tick back up like a lower high in the turnover. It's not that interesting to me. In fact, it's not interesting at all to me. CLG continues. ABG continues. Not looking for. XPD continues. Not looking for doing a lap of honour on any of these things, whatever you want to call it. Just looking for new low risk entries. Every time I do these, I'm just looking for what might hit the end of day screens or what I might be interested in. I make my plan 99%, 97% of the time after when the market's closed. If I've got an idea, I do not, I'm not looking for actionable trend trades in the intraday market very often. I'm giving myself a little sneak peek of what could be ready. Swing trades are a little bit different. I do have methods where I approach the intraday market, but only in the very best markets where there's lots of volume and aggressive sort of action, especially when I'm in the US market. But at the moment, the market has been put your money in growth stocks and let them work. No need to trade around positions whatsoever in the market we've had. Cadence, I think there's a bit of news on that one. I know it's looks like a stage 3 to me, really. So those who are riding that one, it still looks very constructive there, right side of a base. Looker's basing out there. This is a return to profit, return to growth. It's a recovery. Idea, I suppose. Not an idea in my world. Same with SafeStyle, return. This one's expecting to return to profit and growth, pre-tax. And turnovers kind of making a higher high, ticking up strongly. So, in the swing zone, I suppose. In the pullback zone, I should say. CER, obviously we're holding this. I know some of you are holding it from this pullback here, so high five to you guys. Huge mover, and I'm holding it from here. Added along the way, so feed the winners, starve the losers. You end up with an extremely low volatile sort of negative end of the portfolio, an extremely aggressive positive side. Not extremely aggressive, but and it's worth just I'll just reverse this up here and just say a lot of people will if you want to ride growth stocks, it doesn't matter what the spread is to me. I'm looking for aggressive growth, and a lot of the more aggressive moves in higher beta stocks, they will tend to have wide spreads. And I'm not shooting for a 10-15% sort of Twitter move. It's everything's life and death over a 10%, 15% move, isn't it, these days? No, I'm shooting for a trend, and I'm shooting for 100% plus on every trend trade I take on. And so you deal with these are going to be more volatile stocks, but it doesn't mean your portfolio will be more volatile by taking these stocks, because position sizing takes the volatility out of the volatile stocks. So when you build a portfolio, the volatility is never in the down near break even or negative end. It only starts to get volatile with big winners. The best problem you have, which is what everyone strives for, big winners. Guess what? Suck it up. Volatility is going to be in big winners. So, you'll hear a lot of people go for real low beta. I suppose, we talked about Lion Trust this week. it's trading these stocks. You know, Lion Trust is a really half the beta of a small cap stock. It bumbles along at an extremely slow pace, and when you position size for a tight base on something like Lion Trust, you actually have quite big gap risk because the position will be weighted on price and tightness of base. Now, with the stocks, you know, the small cap traders are in, the small cap, you know, the Lion Trusts of this world are in, tend to be more volatile, but yet Lion Trust is very smooth trading. So, you know, that's what we do with the portfolio. You know, we position size in a sensible way, and we only add to what's working, and that, you know, basically gives you more fire, you know, more chance of solid returns, you know, because you're only feeding what's working. What's not working doesn't get an add point, doesn't trade one, you know, the way I add to a stock. So the losers will always be nothing on the account. And fantastic year for just holding growth stocks and not trying to sort of, you know, I'm using my margin account, what's usually my swing trading account. I'm using it for add points and that on growth stocks because it's, you know, everything's still working. So move on from there. Tick up in Elco, is that accelerating? I think it is. I've drawn a base in on here actually, stage 1, stage 2, stage 3. You know, not the best trading stock in the past. This was the market crash, but came out of that flying, didn't it? IQG just melting as well. This one's a lose, slightly less scenario. Eccentric. So always try and do something of interest, bit of off-piste in these. You know, trading volatile stocks should not, if done correctly with position sizing, should not mean you've got, you know, volatile losers on the account. No, your losers should all be sort of, you know, they might be volatile, but they won't have a weighting effect on the account. If you never add to losers and only add to winners, you know, the volatility will only be in winning stocks, and that's where it should be. If you're making returns, that is always going to be a problem, and it's not a problem. You know, it's just something you have to over time desensitize yourself to. Winners are going to swing your account around a bit. You know, guess what? There's no way around that. Big returns basically result in volatility in open profits. Okay,